What's up, traders? Julian here, jlewistrading.com. Today, quick video on having a sell plan. So again, a little while ago, we talked about the 3 E's. One of those E's was exit, or in brackets, profit target. It's super important before you get into a trade to understand where you're going to want to get out in profit. This is part of your trading strategy. It's part of your trading plan. It's very, very important to know before you get into a position where you're getting in, where you're getting out on the upside, and where you're getting out on the downside if you get stopped out. And so what I want to talk about very, very quickly is what is your selling plan? You must know this before you get into a position. Very, very simply, when you're looking at a trading strategy, the most important thing you could do is once you've ascertained what you're going to trade and why, you should probably understand the importance of key technical breakout levels that you're trading. And when you're putting on risk, you should use that risk profile as a forward-thinking indicator as to how large your profit profile is going to be. So, for example, generally traders will take a trade with a base minimum of, let's just say, $1 of loss for $3 of risk reward, rather, pardon me. These are arbitrary numbers, but I'm just giving you an example of 3-to-1 upside to downside. And this is part of the selling plan. So, for example, if you were to look at this situation right through here, you can see that this stock dipped, and that you can see right here that there's a level of resistance that you could potentially, as a day trader, break out of. Now, based on this trade, taking this breakout, what you would want to do is you'd want to factor in where is your risk profile, where is the maximum amount of loss that you're willing to take on this trade if it fails. And let's say that that was right down through here, and that represented $1. What you'd want to do is on top of that, put a 3-point tick up. And then you'd say that that is my sell plan. If I get hit in profit, my sell plan tells me that I'm getting out at $3 because I've got $1 worth of risk. This is what we mean by a sell plan. So it's very, very important to have a sell plan. It's very important to understand what you're going to do before you get into the trade. Knowing every aspect of your trade before you take it is what's mandatory to survive in this business. It's super important to understand where you're getting in, where you're getting out if you're wrong, and where you're getting out if you're right, all prior to before getting into these positions. So again, top down, you got to have your scan, you got to have your stock setup, you have to have your momentum indicators, you have to understand your levels of support and resistance. And once you understand that entire profile, you have to understand where you're getting in and why, where your stop loss is, and take whatever amount of loss that you're willing to put on deck and extrapolate that by 3, and that is your sell plan. Here's a caveat. If your sell plan target gets hit and price is just rocketing, then just manually trail your stops bit by bit by bit by bit and just inch your sell plan below where current price action is. And when you get stopped out on the first snapback, well, then you're up a little bit more than you anticipated for. I hope some of this has helped. My name is Julian. I'm at info@jlewistrading.com if you have any questions. And today's video was on why it's important to have a selling plan. Again, you got to know where you're getting in and where you're getting out before you even put on a position. It's proper risk management. Thanks for watching.